There's other factors that take you from managing one flip to managing $150 million in assets. One is people's skills, because you need to bring the talent that is going to help you scale and grow that business, because you cannot do this alone. A lot of people say I'm a self-made millionaire, self-made billionaire. I don't believe in that. And the reason for that is, yes, you might be putting the effort and working on yourself and being self-centered of what you are doing and focused, but everybody else around you are contributing to your life. I never understood how important it was as I was scaling. So the more I start bringing talents and people who have alignment on a mission with where I wanted to go, the more we start growing. And in the process, you're gonna learn the people that belongs to that community and the people that don't. One, they have to be aligned. Aligned in values, aligned in mission. The mission might not look exactly the same, but have an end goal that lead us to that path. Sometimes it's gonna be messy, it's gonna look different paths, but when we have one target, that helps us to walk together through the path. The other thing, you have to do your due diligence. Go deep on the due diligence. If you are managing money or if you're doing deals, don't skip steps on the due diligence. So for me, I was great at doing due diligence in numbers and figuring out the risk. Is this technique or strategy can fail? And I was great. And I always have a plan A, B, C, D in all of that, knowing that there's a potential of failure. What I needed to do also is due diligence in the people. It's like getting married. You marry the wrong person, then you end in the wrong spot. And it's a very painful process. There has been a great experiences and not so great experiences that have allowed me to understand who is the people I want to work with. And the other thing is discipline in your way of looking at opportunities. One of the things that I noticed with a lot of failures in big companies when it comes to real estate is that they go and invest in the hype of what asset is doing better without a structured approach. You need to be structured. Structure gives a lot of certainty to investors. It gives you a pattern and a clear direction, not only for you, but your team. But also structure needs a little bit of flexibility too. You need to figure out how to mold it, adjust it as time changes, because economy is going to change, assets are going to change, people are going to change on what they like, right? So it depends. But if you ask me, I think the growth has been going from learning my numbers and tactics to becoming a business person who knows how to partner to give proper direction for the business, which is a combination of numbers and people. And besides that too, business is two things. It's a spiritual game and it's an intelligence game. And you have to take time not only to think, to evaluate how are you managing business, but also who you are becoming in the journey, so you can upgrade yourself to manage the type of business you're going to be managing. And when you're scaling, you're going to need access to capital. Access to capital allows you to tap into resources that maybe you're limited with the existing business right now. You have to bring to the table whatever you have. Most people think that their problem is access to capital, when in reality it's not. Is the conversion of these capital into your deals.